Have you ever heard this?
Don't get whole life. It's a ripoff.
Yeah, so have I. In fact, I might have said it a couple times. But in this video, we're going to explore why does whole life get such a bad rep? Hey family, welcome back to the channel. It's Hasani Houston. And today we're going to explore whole life, why it gets the bad rep. By the end of this video, the truth will be revealed to you. And let me tell you, it's not what you think it is. But you got to stay till the end to find out. So, I've been in the life insurance industry for well over a decade and a half, and I've heard a ton of horror stories when it came to life insurance. And sadly enough, majority of those horror stories were around whole life. I mean, you heard things like level is the devil, whole life is a ripoff, I paid more into my policy than it was worth, my family paid into the policy and never got the cash value. I mean, all kind of different things. Now, I will say, some of the criticisms were valid. However, what a lot of the insurance companies do when there's a valid criticism is they correct it and make things better. So one of the biggest reasons why whole life gets a bad rep is because of miseducation. And it's not on the client and the consumer's part, it's on the agents. There was a time where agents slanging whole life policies and saying it was this, but it was really that. Give you an example. They tell people that you have a permanent policy for the rest of your life, and which was true, but then they also talked about accumulating wealth in the policy. That was false. The point of having a savings account with your life insurance was so that your life insurance could last your whole life without you having to pay your whole life. That was the original concept, okay? And that's why premiums were higher with a permanent policy versus with a term. Agents were highlighting the savings portion as a feature, and people were looking at that but not getting the return they felt they deserved. So you had whole life where it was the most expensive permanent policy. You had whole life where it wasn't flexible, and if your premium was $100 and you put in $99.99, the whole policy would lapse and you would lose your money. You had whole life that didn't earn a lot of interest. But here's the catch. Whole life is a division of life insurance, and it has a branch that goes down the road of what's called final expense. While the other branch goes down the road to, let's call it participating whole life policies or infinite banking. So what happened was people were getting final expense policies thinking that it's like infinite banking, or, some of the legitimate concerns where they've been paying into a policy for 15 years and they mess up on one premium and now they lose everything. That's legitimate, right? So they started fixing those things. But a lot of people later on started getting final expense policies assuming they're like whole life infinite banking policies, and they were not. They weren't. And so here's the deal. Final expense policies is a type of whole life policy where you have a small face amount, and the face amount could be $5, $10, or up to $50,000. But the whole purpose of final expense is to cover your final expenses. So there is a purpose for it. See, before I even said that whole life sucked and everything else, and I'll be the first to tell you because I was misinformed and I was miseducated too. And with final expense, there is a place for it, and it is extremely, extremely valuable. And I'm going to tell you why through a story. So we actually had a client when I first started in business. My wife had a client, From when I first started in business, my wife had a client, and he was a single father, 5-year-old son, and they got a policy with her, and it was $500,000. And, he was putting money into it. So he was excited for the protection, and he was excited for the cash accumulation as well, because he wanted to use some of that money as a supplement, because he was going to be able to pay for his policy for the rest of his life and have a surplus of cash. So he wanted to use that. Anyway, what ended up happening is he had the policy for about 2 years. or just under 2 years. And during the holiday season, unfortunately, what ended up happening is he gets in a car accident. And when he gets in a car accident, he's propelled from his car, and he lived through that. But what ended up happening next was not the best thing. Oncoming traffic saw him, or did not see him, and as a result, he didn't make it through that incident. So when this happened, I remember that we got the policy for him and his family, and when we got the news that he had passed, we informed the insurance company, and one of the things that ended up happening is they investigated. Now, in fairness, they investigated because this was during the holiday season, and guess what's high during holiday seasons? Where people want to unalive themselves. And so that was the first thing. And so they wanted to investigate to see if this was intentional. Well, that investigation took more than 3 months. 3 months. In that time frame, the grandfather didn't have the money to pay for his son's funeral in full. So they had the body on ice for a while. And he had to find a way to get the extra money. And I remember how frantic he felt when he was calling my wife and saying, hey, is the money coming? What's going on? And so she's explained to him everything and how they're investigating, and how we don't have a timeline of when the investigation is going to be up. They just let us know, oh, we're still investigating. That's all they're telling us. And I remember how it felt, even though it wasn't my client, I still felt the sadness because of how helpless he was. He wanted to do the best for his grandson, but he didn't have the finances for it. Eventually what ended up happening is his grandson ended up having to move away, and that was unfortunate because he got moved out of the school. They ended up losing the home, and basically what ended up happening is they did get a chance to bury the son as they wanted. Well, they did get a chance to bury the son, but when all this is happening, I remember we still showed support and everything else like that. I remember seeing the financial strain and the psychological despair. So after these 3 months are up, we get a call from the insurance company. They say, hey, investigation is clear. It's not foul play. Here's the check. So in fairness, they paid the check. So here's the fair part. They paid the check, and they paid interest for the time the family had to wait. So that's fair. And so I remember we were able to provide that for the family, and I remember the relief that came over them. But then I also remember that even though there was a relief, there was still a pain of what they still had to go through. And because I was young in my career, I thought all life insurance paid out quickly. This is when I learned that regular life insurance has a potential to where it could be delayed in when it's paid out. And whereas final expense, if our client would have had a final expense policy, the policy would have paid out in 48 hours. It would have paid directly to the funeral home. It would have taken care of the remaining debts dealing with the funeral and the morgue, so the family didn't have to stress about that. Now, it may not have been able to cover the mortgage and everything else in total, but it might have helped with the payments for a couple of months. And if we could have got a final expense policy, let's say for $25,000, $50,000, because the single father was young enough. So now we pay the funeral costs. Now that help pays for the mortgage, and it buys 3 months or whatever it is for the waiting time, and then they get the lump sum. I learned from that experience how powerful and how important final expense could be, and that there's a place for it. And so because of that, I don't want to bash what whole life is or could be for people. But what I want to do is educate and let you know that when you get final expense, know what it is that you're getting and what's the purpose of it. It's not to help you accumulate wealth. In fact, you're probably not going to accumulate any wealth, and you're probably not going to be able to borrow against a policy at all, just to be blunt. So it's a whole life type of policy, and it's the most forgiving policy because it excuses a lot of health ailments that usually would get you disqualified for life insurance. We've been able to get people qualified for life insurance through final expense for things that I would have never imagined. And so I say that because final expense is a type of whole life, and it is valuable, but it's not for everyone. So when you understand that difference and you understand the place that it serves and how it can assist people or how it can help people, then it helps you understand, yes, it's whole life, but it's not whole life the way you think it is. Because see, what happened in the past is I've come to people and I've seen where they had a whole life policy, but it was a final expense policy. But they don't see the final expense part. They just see whole life. And then when they have the problem, they brand it whole life, and then anything whole life gets a bad name to it. And that's the part that isn't fair. And again, that's not the client or the consumer's fault. That's the agents. That's the agents for misrepresenting what it is and for not properly explaining what can happen and what are the benefits. So I want to make sure I clear the air and I say there's 3 types of whole life. Final expense, non-participating, and participating whole life policies. And the participating whole life policies are infinite banks. The non-participating are just permanent coverage. So that's the way you could think about it, but it's not graded as final expense policies. So those are the 3 areas of whole life and how they will work and what those benefits would be for you. And each section of the whole life is completely different and serves a completely different purpose. So in summary, is whole life itself bad? No, it's not. Not at all. I've seen some of the good that it can do here. Whole life is a tool, but we have to be clear on how does the tool work. And once we have clarity on that, then we know how to apply it based on our needs. Because final expense definitely has a place. So final expense could serve like a bridge insurance where it serves for the events of the funeral home until you get the large lump sum for everything else. Because let's assume everything was good. Those type of policies still could take 2 weeks to pay out. So they're not immediate, traditional life insurance policies. Whereas final expense pays out in 48 hours. That's a big difference. And that's why that would be important. So thank you for taking the time to sit down with me today. Hopefully this provides clarity. Hopefully now you know the truth and we can dive into more later. Let me know what you thought about this in the comments. Thank you so much.